The EU could potentially flood the market with their sugar, causing prices to fall. Nick Kelsey, the Gold and Silver Club. The European Union will remove quotas and minimum payments for sugar beet farmers from October 2017. This is set to be one of the biggest changes to the sugar market. How do you think this will affect the price of sugar?
I think it will have a huge impact on sugar prices. Currently, the EU is the world's leading producer of sugar beet. The total EU production quota for sugar is 13.5 million tons, which is divided between 19 member states. On top of that, the EU is allowed to import 3.5 million tons of sugar from outside the European Union to meet demand from countries such as Africa, the Caribbean, and also Pacific states. Now, if the quota is removed, I think that gives the EU free rein to produce and export as much sugar as they like, which raises the concern that the EU could flood the world market with their sugar, causing prices to fall.
Sugar consumption is set to exceed supply in 2016. What does this mean for the market?
Currently, sugar prices are trading at a 2.5-year high. Prices are up over 20% since the start of the year. Now, if we look at this month, for example, sugar prices have been fueled by massive buying from hedge funds and also rain disruptions in Brazil, which is the world's #1 sugar exporter. Secondly, dry weather in Thailand, the world's second largest sugar exporter, could also result in production falling by almost 14%. Now, if we take these two scenarios on board, I think this will impact world sugar supply further in the months to come, driving prices higher.
Brazil will challenge Thailand at the World Trade Organization over subsidies for sugar producers that it says have dragged down global prices for the sweetener. These are the two largest sugar exporters. Do you think this will have an effect on the sugar industry?
Of course, but this is not the first time Brazil has challenged a country over sugar subsidies. Brazil won a landmark case against European Union in 2004 that triggered a complete overhaul of the bloc's policies for sugar production and also had a long-lasting impact on the global sugar market. Now, Brazil and Thailand, they're the world's two largest sugar exporters. Overall, this seems like a battle over market share and who can export more. Brazil is accusing the Thai government of funding its sugar industry with loans valuing $1.3 billion, which allow Thailand to ramp up sugar production during a period when the commodity endured a long cycle of low prices. Now, if Brazil does win this case, I'm sure it will shake up the sugar industry and also have a knock-on effect on Thai's exports, which potentially could benefit Brazil.
Counting all current issues in the industry, what do you think is the future for the sugar industry?
Away from current issues, the future of sugar and sugar prices really come down towards supply and demand. As we've already discussed, the sugar market is heading into deficit. Also, the global population is growing, so supply is likely to exceed demand. If we look at other commodities, for example, such as oil, now if oil prices keep rising, then that makes cheap alternatives such as biofuels, which are made from sugar, very attractive. So taking on those factors, I think there's very good reason to be bullish on sugar prices looking ahead. However, things could really change when the European Union removes the quotas on October the 17th. I think this could be a turning point for the sugar market and definitely a date that traders want in their diary.
I'm Celeste Skinner, and that's all for today's Commodities Corner. Tune in on Thursday with Lucy Porferman to see what's affecting steel.